All right, so today is January 6th, 2020. It is the first More Knowledge show of the new year. It's been about a week since we came on here, and yeah, not surprisingly, quite a bit has happened. If you don't remember the last time we did an episode, everything seemed kind of peaceful. Like things were starting to resolve itself. The election in the United Kingdom, it pretty much eliminated the fears of it reassured people that we would have a Brexit soon. The phase one trade deal came in, so people thought that the trade war was not going to escalate or turn into anything worse than it already was. And just overall, the economy was appearing to look a little bit better. I mean, it had not much has really changed with the economy. The economic picture is still the same, but I guess there was quite a bit of optimism about the economy. It's just everything was just kind of peaceful. We were in the Santa Claus rally period. The last few days of the year, retail sales were good. People were spending money for the holiday season. Pretty much all that stuff went just the way market participants wanted it, and everyone who's bullish on the stock market, and especially our president, that's exactly how they wanted it. But this past week, since we did that episode, just recently, in fact, a lot of things have changed. For one thing, the bond market was steepening. Now yields are coming back down, so that's hurting a lot of stocks in the financial sector. So of course, if you have money in banks, that's not good for you. And it's just overall, I would say there's a lot more fear out there. All of a sudden, we just got hit with an explosion of chaos on social media, in the media, in markets. But in fact, the reaction in markets wasn't extremely big. But I guess the big story is World War III. So the question everybody wants to know is, are we headed towards possibly the worst war in human history? Which I would say, if World War III does actually break out, and they have to have a draft, and people are actually like fighting, like not a trade war or just threats, like an actual war, it will probably be the end of human life as we know it. So I'll just say, if there's ever a chance of World War III happening, it won't matter how the stock market reacts or the economic impacts, because it will pretty much end the world. Because with all the nuclear weapons that are out there, it's going to be resolved with something of that magnitude. And yeah, it would be terrible. In fact, it may not end the world, but it would basically end this generation. It will be like how the plague affected Europe, where it killed like a large chunk of the population. Like a large chunk of the Earth's population would probably die out, and we would probably have to kind of restart society and then rebuild it back up. But that, of course, if that does break out, which I'm not going to say it's impossible, nothing else is really going to matter. This generation will pretty much be doomed. Human life may be doomed, and I don't think that's an exaggeration. I really think if World War III was to happen, then we pretty much have hit the point where, we have failed. If we let World War III happen, we have completely failed as humans on this earth, and we probably do not deserve to exist anymore. But besides that, the whole reason for all of these World War III fears is, the escalation in tensions between the United States and Iran, and these problems are not new. We had a whole bunch of stuff last year It did cause some turmoil in the oil markets. The whole thing about that. It was a it was a whole thing about the ships being bombed and stuff like that. Ships not allowed to pass certain places, and that did cause quite a bit of fear. But then it kind of tamed down. But now it's back. So I guess the question is, how significant is this? And it's worth addressing. And to be honest, I do not think that this will end up being the one. I don't think that this is the thing to tip us over. This may be one step of the process to get to that big thing that eventually tips us into like a world war, but I do not see this being it. I think that, the tensions are never going to go away, but this is going to kind of die out, and the focus on it will not really exist to this level a couple weeks from now. So, a lot of people may see this as an opportunity to buy into the financial markets because they saw they saw, a big spike in oil, a big drop in stocks, and a lot of people think that, this is all just short-term fears. It's nothing too serious. And to that, I would say you may be right, but it does not necessarily mean that anything has gotten much better. Okay, because you have to think, is the world did not really get much more unstable after what happened with Iran. The problems that existed before will still exist after. And the main threat right now is still the United States-China relationship. That has not really changed. Okay, the phase one trade deal we've been over many times does not really change much. So, we still have the issues with Brexit in Europe. That also has not really changed. We could still have a no-deal Brexit, which would cause a lot of chaos. And if we're being honest, the chances of us getting to increasing geopolitical problems is greater than us seeing a decrease, because we have not hit the peak of these problems yet. None of these things have actually been resolved. So, I would say even if this Iran thing, the attention to it kind of dies down, I think as time goes by, the chance of seeing like a World War III would probably still be increasing. It just won't be in the headlines. But underlying everything, the problems still exist, they're still rampant, and they're still increasing. And that's just the phase that we're in. That's the phase that we're moving in. I don't think that there's much you can really do to change that. There's a lot of, it's just natural, structural, hierarchical challenges where you have America as this country that's at the top, that's trying to maintain their control and foreign influence. And then, over the years, other countries have kind of grown resentful of America, and then they try to push back. And then, America gets mad, and it just starts this entire cycle. That's the cycle that we're heading down. So America's at the top. Other people are trying to challenge their power, and as a result, you're going to get this global political volatility, and this dynamic will not change until something changes in the way our world is structured. When it comes to power among countries, when it comes to, this is not going to change until America's knocked off its throne as kind of the decision maker, the big decision maker in the world. That is really what's beneath all of this. America's trying to defend itself. The world is trying to take down America. And no one's saying that directly, but that's what's happening. And it's getting more obvious, and it's ramping up. And you could see that in many different ways. So, even if this Iran thing, even if it's not talked about as much, I just want you all to understand, each day we are moving closer to a World War III. I don't know if we would get there, but we are moving in that direction. So if you do not like the direction we're moving in, if that scares you, then I would not say that even if this Iran thing just gets pushed to the side, that you should be more comfortable, because the underlying dynamic, the conflict beneath all of this, beneath the trade war, pretty much like every major political thing that you have going on, it's really about this. It's about America, their economic and political and even cultural influence around the world, them trying to defend their position and everyone else trying to knock them off their position. And unless you can find good evidence that that is changing, that that dynamic is weakening, and maybe, America's, this conflict is toning down, which there's no reason to believe that it is, there's no reason to be more optimistic. So that's the core issue underneath everything. Besides all this short-term chaos, that's the problem. And that's not changing anytime soon. So yeah, that's my opinion on World War III. So, after talking about World War III, I guess we can talk about what's going on in some of the markets. That's always an interesting topic. And today I want to talk about gold. Okay, because I think that this is being slightly underlooked. I've been hearing about it. Some people have been talking about gold, but it's not been talking about probably as much as it should be, considering what's going on. Because, if you understand what the price of gold means, pretty much, if the price of gold is rising, that probably means that there is something very bad going on in our world. Chances are, whether that's inflation, whether that's a slowing economy, or maybe something like a World War III type situation where, in a war, people aren't taking risks. People want safety. People want insurance. People want to be sure that they're going to be able to maintain their wealth throughout all the chaos. Because when things are stable, people don't want to be invested in gold. People want to be in more riskier things. But when things get bad, people run to gold. That's always how it's worked. So it's a good kind of measure of sentiment about what's going on in our world. And there's many different buyers of gold. So you have big institutional investors, you have individuals, corporations, extremely rich people, and central banks and governments. All these people buy gold. So when you see the price of gold rising, you're not always sure who the buyer is. But, let's say the buyer is some central bank, then that's probably a bad sign, because I would say, the central banks, these are the guys who kind of control economies. Well, yeah, I would not say they literally control economies, but they trick people so much into thinking that their policies control the economy that they end up controlling the economy, because everyone pays so much attention to what they do. But a lot of people underlook the fact that central banks are buying a lot of gold. And if they're buying a lot of gold, that means that they're worried about something. They think that something is coming, and they're obviously not going to tell us that. But if you can just look at if they're buying gold, and that can cause the price of gold to rise. But right now, the price of gold is at a 6-year high. So I guess there's multiple ways to think about, why that could be important. But, I've heard some people say the price of gold is up for a good reason. It's actually a good sign for the economy, because things are looking better. Investors are less scared of taking risks. So what they're doing is they're selling their dollars, and they're getting into riskier assets. So they're moving away from the dollar into riskier currencies and stuff like that. So what that's doing is, because the gold and the dollar are inverse to each other, so if the dollar's falling, then gold's going to be rising. So some people are saying, well, because things are better and the dollar's falling, that's causing gold to rise. That's, of course, one way to look at it. But, then you're making the assumption that the dollar is falling because the economy's better, which I'm not overly certain of, if I'm being honest. That's quite an optimistic way of viewing the situation with the dollar, when there's plenty of evidence that that's simply just not the case. To say that our dollar is getting weaker because the economy looks better. Now, it could have some economic upsides to it. There's plenty of companies that do win a lot from having a weaker dollar. I would not say that average people are I will not say that most people's lives are improved by a weaker dollar or the overall outlook for the country. I mean, if your currency's weaker, that's generally a sign of weakness. And I still do not believe that that's very understood. I think a lot of people believe that, having a weak currency is like a good thing, when in fact it's really not, because you look at a country like China. A country like China is trying to get their currency stronger because a country like China wants people to be confident in their country. A strong currency is a sign of confidence. It's not a sign of weakness. But a lot of people have that completely backwards, including our president, who constantly talks about having a weaker dollar. But reality is, the reason why gold is up so much, for quite a few reasons, none of them are really good. So first, you got geopolitical risks. The whole World War III thing, all the uncertainty about that. That kind of fluctuates, even though it never goes away. So it fluctuates more than it should. Sometimes there's a lot of fear, sometimes there's a little bit of fear, but the problem is still there and it's still increasing. It's just not always being fully paid attention to. Also, another reason is inflation. Inflation has been slowly increasing. We've seen certain readings of, there's quite a few readings of inflation. There's some readings that show we're at like 1.6%, 1.8%, and then there's also readings of over 2%, which is actually our inflation target. So I would say if inflation does pick up a little bit, that could cause some fear, because we've been in such a low inflation environment for so long. If all of a sudden you look up and then inflation's at an historically normal level, that may seem like, we're about to get runaway inflation. And that, of course, is also contributing to the higher gold price. Also, of course, there always is the risk of the rising price of oil. If the price of oil rises, then, that could also cause inflation, and that would make people want to go into gold. Another reason is just economic slowdown. There's, of course, the fear, but it's I would say a solid fear that the economy is going to get worse. And, of course, if the economy is getting worse, then you don't really want to be invested in the stock market. You probably don't want to be invested in the bond market, because you're not going to get much yield, because interest rates are not going higher. You don't really want to be investing in the credit markets, because, of course, if the economy gets worse, a lot of companies may have a lot more trouble paying back debt. And, companies, if they get downgrades, the value of their bonds may fall quite a bit, because, the interest rates would rise for companies who have risks of failing. And so then you look around, it's like, where am I supposed to put my money? I don't really want to invest in any other metal that's used for industrial purposes, because, of course, if there's a recession, those metals will not do well. And yeah, so that kind of gives a good reason to want to invest in gold if you think the economy is slowing down. I think that's also a factor. And another factor, I believe, is that the Federal Reserve is losing control. Okay, the Federal Reserve is kind of scrambling to find a way to keep control, to keep confidence that they have the power to do all the things that they've always had to do. So, like, keeping inflation at a certain level. So, recently they've been having trouble getting inflation up. What happens when inflation gets up? Will they be able to get it back down? I mean, what reason is there to really believe that they can, without, of course, crashing the economy? And the answer is they can. I think people are starting to lose confidence in the Federal Reserve. Just recently, I heard on the news, the Federal Reserve is trying to find new economic models to study the modern economy. So they are even admitting themselves they really don't know what they're talking about. They don't have, their stuff is not updated. The stuff that they're looking at is not relevant to the modern economy. So the decisions they make and the tools that they have simply are not compatible with the problems that exist today. And I think people are realizing that. And when people lose faith in the Federal Reserve, they'll lose faith in the dollar, and they want security, so they move to something like gold. Yeah. So that also makes sense. And then another reason for the price of gold rising is, I think, is global de-dollarization, which is countries are getting rid of the dollar. I think that this is happening. Countries like Russia and that guy, the United Kingdom, he was the former head of the Bank of England. He talked about this. He talked about how having the dollar as the main reserve currency gives America an unfair advantage, and it creates instability for a lot of other countries. It causes a lot of pain for a lot of other countries, and that it's inevitable that we have to move in a different direction. So what we're seeing is some countries are getting rid of dollars and they're buying gold. And that also, I believe, is the reason for the dollar weakening and gold strengthening. So that's kind of my take on it. Now, regardless if you think gold is a good currency, gold is a good monetary system to have a gold standard. I don't really want to get into that argument right now. You have to understand that gold is still going to be a store of value. Regardless if it's ever used for exchange, it's a store of value and it matters. And when gold moves higher, especially to like a 6-year high, we should respect that and really look at that and take that seriously, which I do not think a lot of people are doing, but it's an important sign and it's something to think about and continue to monitor closely. And so after talking about gold, last thing I want to talk about is, I just want to run through the stock market real quick. I'll just say this. I think a lot of people, I've heard a lot of people say they think that we're going to have like about 10% return in the stock market this year. They're saying stuff like it's not going to be as great as it was last year, but it's not going to be a terrible year. It's just going to be a normal year for the stock market, about 10%, 8 to 10% gains. I think that's kind of the consensus view from a lot of, supposed experts, people who really have this whole thing figured out. But honestly, I just don't see it. I just do not see it. If you look at quite a few indicators, markets right now are very frothy. They are very overbought, they're overvalued, they're over optimistic. And I could just give you a few indicators right now. The greed index, which is a combination of a bunch of indicators to show how greedy market participants are, is currently in the 90s, which indicates extreme greed. Like, we've gotten pretty close to 100, which is as greedy as you can get. But that's one indicator showing that we have extreme greed. Another indicator is the volatility index. The volatility index has been very low. The volatility index is also known as a fear index. So if the fact that despite everything, the volatility index is extremely low, meaning that no one's really scared of anything. And there's many reasons to be scared. So when you have many reasons to be scared but no one's scared, that's what you call a market disconnect that can't last. So that's another thing. Another thing, the Shiller price to earnings ratio, which is like the average earnings over 10 years compared to the current market. It's some calculation, but it's a very good indicator for if the market's overvalued. It's currently above 30, which is a very high level historically. It's way above the average. So, you have to ask yourself, how long can that last? And another indicator I would point to is the put call ratio. If you know about options markets or derivatives, a put option is an option to sell. A call option is an option to buy. So if you're buying call options, that means you're bullish. A put option means you're bearish. And currently, the put to call ratio is showing that a lot of people are in call options compared to put options. And that also just shows extreme levels of market exuberance that really just cannot last. So when you see all of that, when you see all of that is happening in the current environment that we live in, when you see all that is happening with barely any earnings growth, I just do not see how you can justify another 8 to 10% on this market. There simply just has to be a correction. Something significant, as a significant market drop. And I'm not saying that this is going to be a 10-year long bear market. I'm just saying that I think something needs to happen. But I'm afraid that it won't. And the reason why I'm afraid is the higher markets go from here, the worse the eventual crash is going to be. And I believe if you have a big enough crash, that could hurt investor confidence to the point to where you do have one of those 10-year long bear markets. If you just have a normal bear market, a normal correction, you may be able to bounce back from that. Things have corrected itself. You can bounce back. But if you have a huge market drop, what's going to happen is people are going to be so terrified from the drop that they're not going to want to get back in. And then you're going to have a long period where markets are down. And I think that could also have an effect, that could have a spillover effect on the economy. So I think a market correction would be good, but I'm not sure that people are going to allow it. I'm not sure the Federal Reserve is going to allow it. I'm not sure Donald Trump is going to allow it. I think that they're going to continue to make sure that they keep markets up, but that's only going to make these greed indicators worse. And that's only going to make the crash worse. We've been over this many times, but it's continuing to happen. This trend is continuing to worsen, and the inevitable result is continuing to look even worse. And that's even if, completely forgetting about World War III. Of course, if World War III does happen, none of this is going to matter. And I think it might happen. I just don't think it's going to happen right now, but I could be wrong. But once again, like I said earlier in the show, even if the tensions with Iran phase out and it doesn't seem as bad, just understand the underlying problem is not going to get any better. It's only going to get worse, and we're only going to see problems down the line in the future. Said the same thing about the phase 1 trade deal with China. It didn't actually solve the problem. It just made things look better in the moment. So, take that for what it is. If that stuff scares you, there's no reason to be extremely excited about any seemingly positive news. Anyway, that's today's episode of the More Knowledge Show. I'll see y'all later.